Hello, and welcome back to the Argyle SMB Accounting Forum. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of quick notes before I turn things over to our panel moderator. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our moderator, Keith Neal, Executive Vice President and Chief Financial Officer at Advocates. We're excited to have Keith and our panelists with us for a discussion titled SMB Accounting and Digital Transformation. Welcome, Keith, and over to you.
Great. Thank you, Brittany. Before we get started, I'd like to introduce the panelists and invite them to say a couple of words about themselves before we jump into the discussion. So why don't we start with Michael?
Good morning, everyone. My name is Michael Mance. I am the Vice President of Financial Operations at Dialysis Care Center, headquartered in Chicago. We are a traditional physicians group and related clinical locations for our patients. I have about 30 years of experience, cut my teeth originally in public accounting, moved over to industry and leadership roles, and then did consulting. And then one of my consulting opportunities led to the opportunity here. Glad to be part of this panel. It's a really pertinent subject. So looking forward to the session.
Great. Thank you very much, Michael. Next, I'll go to Rena.
Hi, good morning, everyone. My name is Rena Kacker. I'm the head of FP&A for a biotech company in the San Francisco Bay Area. I have about 25 years of experience in general industry and about 15 of those in finance, focusing on tech, e-commerce, payments, and most recently in the biotech space. Excited to be here.
Great. Thank you, Rena. And now over to Dipti.
Hi, everyone. I'm Dipti Arora. I'm a finance leader in the technology space. In my current role, I'm VP of Finance for a late-stage technology startup in the developer operations space called Circle CI. And I head the FP&A and strategic finance teams at Circle CI. I have over 20 years of experience in both finance and accounting. And like Michael, I started off my career in public accounting and then moved into FP&A roles. And that's where I grew into leadership. So I'm very excited to be a part of the panel today and excited to give my 2 cents on the discussion.
Great. Welcome. So as Brittany said, my name is Keith Neal. I'm the Executive Vice President and Chief Financial Officer at Advocates, which is a nonprofit provider of health and human services. My experiences range from small to large nonprofits to Fortune 200 companies. So very excited with the panelists today. Welcome, everyone. This is a great topic, and I think the timing is really relevant. I was reading 2 reports ahead of this session that I think are certainly relevant. One was a list of the top 5 strategic priorities for controllers, and the path toward digital transformation and autonomous finance transformation ranked among those top 5. The other interesting data point I read before this was a survey of CFOs, where 64% of the CFOs surveyed listed digital transformation and automation as something that was picking up significant steam and mind share for CFOs, and that the 6-year outlook was that there were going to be material transformations and improvements in this space. So I think this is a great topic, and the timing is perfect. So kind of following along with that theme, the digital transformation has certainly grown in importance over the past several years. A lot of organizations, including my own and the panelists, have been shifting and putting a lot of mind share with this. So I guess I'll start the panel discussion off with Dipti and ask, what is your organization looking at, and how has this topic evolved over the past several years with you and your company?
Yeah, I mean, I've been with my current organization, Keith, a couple of years now, so I can talk about in general how I've seen this rise across my different roles. I mean, as you mentioned, digital transformation has been happening over the last decade in a lot of different areas. And with the rise of remote work during the pandemic, this really accelerated the pace at which digital transformation needed to happen. And as a lot of us saw, over the last few years and with the rise of the remote work, we saw exponential growth in certain technologies that enabled us to work remotely, like the likes of Zoom or Slack, that really enabled the collaboration as we worked in our remote spaces, right? And then I've seen a lot of digital transformation really in the finance and accounting space happen probably in the last 3 to 5 years. Like there's been an emergence in a lot of different technologies in the finance and accounting space. I mean, even specifically in the FP&A space where I'm an expert, I've seen maybe we had a couple of different forecasting tools. Up until like 5 years ago, you had very limited options of what you could choose for forecasting, and even that's disrupted to maybe where you have like 20 or 25 different options now. And I've seen that happen across the board, even within the accounting space, with like evolving of so much automation with like an AR, AP, different travel options, different smaller ERP options as well. So there's a lot out there now that that CFOs and heads of finance can tap into to really automate manual workflows.
All right, great, excellent. Yeah, a lot of relevant points there. Certainly a lot to think about. So I know oftentimes when I talk to some of my colleagues about automation and digital transformation, there's often a tendency to think that only really large companies can benefit, from these efforts and this sort of work. So I guess I'll look to Michael. So Michael, how can smaller and mid-sized organizations benefit? Right? Are there opportunities out there where not just the large companies with huge IT departments can benefit from kind of the move toward digitalization and automation?
Yeah, I mean, to Dipti's point, I see a tremendous amount of FP&A tools. I mean, if you looked on LinkedIn, there's just a tremendous amount. For smaller organizations, we are in that space. I think one of the main topics is retaining employee talent. And how do we do that? Investing and retaining in those individuals, providing them the tools that are needed. That could be, going to a cloud-based ERP system, RPA. I've seen dashboards that are really being utilized throughout the space. Obviously, working with your teams to keep in contact with them on an ongoing basis, especially in this remote environment, utilizing Teams and Zoom, and just having access to the latest technology, I think is paramount in retaining talent as well.
I can chime in here a little bit as well. Keith, yeah, I was going to say, I think for small businesses right now, with the way the macro environment is, like, I don't think they can get away from automation, right? There's a lot of uncertainty for a lot of organizations and how the top line is going to grow. And because of this, there's a lot of pressure to reduce costs. And one of the key ways that they can do this and gain cost efficiencies is really through automation, right? That's one of the key levers that they can pull. And as some of these organizations maybe are even continuing to grow, it's like how can they grow without how can they grow more efficiently is what they need to also look at, and automation is key to enable them in doing that. So I think with just given the uncertainty in the macro environment, automation is really key for especially for smaller organizations.
Right, and to Keith's original point, automation is not just a tool for the larger companies. The smaller the organization, the more they are in a cash crunch, most likely, and they need to make decisions very quickly, very nimbly. And what I've seen in the space is basically as companies grow, they adopt the tools that help them scale to the next level. So, they start out with Excel P&Ls and they move to QuickBooks and then to NetSuite. And then since everything is SaaS and use-based or user-based pricing, it's not as expensive to take on these efficiency garnering tools into the workplace. And from the last 10 years to today, what I see is certain processes have been automated to a great level of accuracy. In the past, reporting used to be, you have to data is one thing, information is another, but now more and more the tools give you the information. Budget versus actuals has been automated. A lot of the approvals for purchases have been automated below certain thresholds. And overnight, every day, teams are able to see exactly how much ARR or customer renewals came in. A lot of information gets published automatically, and I think that's helping with efficiencies for the smaller organizations.
Yeah, it's a really good point. At a prior organization I was with, the kind of the move toward automation really happened in kind of smaller segments. So rather than it being a corporate mandate kind of coming down, some of the divisional folks that are really closer to the actual transactional activity, built really automation efforts around what they were doing, right? And that was more of like a bottoms up approach, right? Either automating, your standard monthly journal entries or some bank reconciliations. But I think, and we'll talk about this later, the move toward, digital finance and automation doesn't always have to be a top-down approach, right? So there's a lot of good stuff there. So we've talked a little bit now about some of the benefits, with that last question. So what are, I think it'd be interesting now to maybe focus just on what are the benefits of automating some of the traditional and more routine finance and accounting activities. So Rena, would you like to lead us off in this space?
Sure. So I think it's the speed of decision making. The faster an organization can detect trends and make good decisions, they can stop the bleed of cash, they can orient the workforce to focus on what's important. And so I think it's all about speed. And as long as the information is top quality and it's not having glitches in it, I think it really helps the organization conserve the resources. For example, there are macro trends playing out. And if your book of business, if you could run a tool that could tell you the solvency of your customers, you could pretty much very easily predict whose cash is trending down, who might not renew their 5-year Zoom subscription, or who might kind of get out of that employer survey or other nice to have things. So I think it helps with basically the ability to generate efficiencies and conserve cash.
Absolutely.
I think, Keith, I can also add in a little bit here to what Rena was saying. I think she touched on a lot of different points. I think, the automation really enables finance and accounting teams to up level, right? Because they can provide insight rather than spending a lot of time doing the number crunching or pulling together the data and patching it together. Instead of that, they can spend the time, that all can be automated, provided that the data is clean, and they can spend their time like analyzing that or reviewing it and making sure that it's correct and giving some insight into that. And then I think a little bit like I mentioned before, I think normally in smaller organizations, you have very lean finance and accounting teams, and automation is the way that enables those teams to grow, right? Because you're not able to add headcount at the same pace that the organization is growing. And instead of then adding more hands on keyboard doing work, you can supplement that and augment the team's work with automation. And then that way you're getting your resources in the team doing more interesting work, giving more insight, and then kind of having the manual processes being taken care of by technology.
Yeah, that's a great point, Dipti. It really gets rid of those kind of mundane tasks that are very manual, spreadsheet driven, it makes the team more efficient and more effective in their tasks. And then, just eliminates those tasks. And I think it, provides the team, it helps them with retention too, because they're really doing more value added. And they're involved in business and decision making, throughout the organization.
Yeah, very, very good points. And I think that's a very important feature of kind of moving toward the digitalization and automating finance. It's we're never going to get around, we're never going to get away from the statutory and regulatory stuff we need to do, right? We need to pay the books, we got to make sure everyone gets paid, we got to file tax returns. The quicker we can get through those activities, the faster we can get into the higher value added exciting stuff, right? Because there's no shortage of work coming our ways, and there is really a shortage of budget dollars and sometimes resources to get that done, right? So the more we can automate some of the lower value add activities and use automation and digital transformation to help speed up some of those processes and really, as Rena said, increase the speed of decision making, right? The better, it's certainly the better for the company, but the better for us and the better for our teams, right? It's all around. There's just so many benefits: retention, business value, return on investments. A lot of interconnected points here. All right, so moving on, we've talked about the benefits. What does it take to get those benefits? So what does a successful transformation look like in this area for the accounting and the finance team? So I think with this, we'll go back and start with Dipti.
I think, for a successful transformation, you need to be really clear on what's the problem you're trying to solve by implementing this technology. Because I think, Keith, you were sort of alluding to this, right? It's like it has to be a bottoms-up approach. It's not like a one-size-fits-all that the company's going to mandate saying, we're going to implement this, unless it's like some really larger tooling. But for finance and accounting teams, really, it's like you got to identify what problem you're trying to solve, what are you trying to automate, and then hone in on those particular technologies that help to solve that problem. There is a lot of like low-hanging fruit generally that you can kind of automate in the finance and accounting space, like certain GL entries, bank reconciliations. Michael was alluding to, there's also AR, AP, and a manual work that you can automate, the travel reimbursements. Those are things that are very low-hanging fruit. And then you can start getting into other technologies to help automate that might get you into the space of that Rena and I were alluding to, where you can provide more insights, where your team's able to provide more insights. It's more dashboarding tooling. There's things like that. But I think it's really unique to the organization itself, and then also what you're trying to exactly solve. It's definitely not like a one-size-fits-all. And I think the other thing then that's really critical for successful transformations is understanding what are the dependencies for some of these things to work well. Like in the FP&A space, one of the challenges that we generally hit is when you're trying to implement a tool is that the data is not clean, right? So the tool's not going to be effective unless you can figure out how to either clean the data, figure out the data problem, or like massage it before it like hits the tool, right? So I think depending on like what you're trying to solve for, you got to realize that there's certain dependencies for this implementation or the transformation to be successful, and try to address those ahead of time as you're looking at doing this.
Yeah.
Great insight there, Dipti. I think when I look at it, I kind of break it down to people, process, and technology, where the people are here getting a better opportunity to utilize the upgraded technology. But when you have transformation or an implementation, I think it provides an opportunity to improve your processes versus doing kind of the same old that you've been doing for several years. And then the technology component, choosing the right technology and what works for your organization currently, but more importantly, future state as it's growing.
Yep. And I think in that spirit, it has to be, it's ideally should be metrics based when we embark upon a journey of transformation. It helps that we have a core set of metrics that are before and aspire to measure. For example, if a purchase order approval takes 21 days before automation, and then once it's been automated, if it's flowing right through, if we can measure those efficiencies that have been garnered. And in order for all of this to be successful, I think it's super important that everyone is aligned with the mandate. So everyone has their skin in the game, whether they are part of finance or they are peripheral business teams. everyone has to know what the end goal is, so that we don't get, distractions along the way.
Absolutely, absolutely, excellent points. And I definitely want to, emphasize what Michael had just said too about technology, right? Having overlaying technology over bad processes or bad data is just going to get you a bad output, right? Technology in and of itself is usually never the solution. So there's a lot of work that you have to do really before you start implementing that that strategy or that process. So there have been a couple of questions rolling in, and we'll save a few minutes at the end, but a couple of questions have come up that I think are relevant for some of the things we're talking about now. So I'll read both questions and throw it out to the panelists to see if we can incorporate some of what we're talking about for these questions. One of the questions is, do digital transformation needs differ per industry, or is it pretty standard for finance teams across the board? And then the second question is, before we implement digital transformation, what are some of the things companies need to make sure they have or know before they start the automation update process? So I think these are two good questions and really align with what we're talking about right now. I think I'll start talking about number one, and then I'll open it up to the panel. But in terms of, is it standard across the board, or there are different needs? I think, and at least in my experience, there's some base level of the transformation that is fairly standard across industries, right? There's the accounting, GAAP is fairly consistent across industries. The technology stacks, there's a lot of commonality. So I think that at some base layer, there's a lot of commonality between industries. I think as you start to get deeper and look at the more advanced automation and digital transformation, there will be some differences between your plans and your operations. So, in my career, I've ranged from, early in my career, I worked in high tech and transitioned over into medical and human services. And in my own experience, each of those industries has had different use cases for automation and digital transformation. So I think there will be some, but I think that the intermediate and your first foray into the space, I think there's a lot of commonality between the industries. I guess I'll ask my panelists, is that your experiences, or have you had a different take in what you're seeing?
That sounds pretty accurate, because industries vary in terms of, are they B2B, B2Cs, or how big they are, what vertical they are in, what are their paths to monetization, and the transformation has to address the areas that most benefit from the efficiencies and an unmet need. For example, in the e-commerce software as a service space, it's basically you have a large group of customers, and if your DSOs are trending a certain way, an automated technology can catch that and put in sort of additional rigor around the collections and other areas that may need quick attention. So it really differs from industry to industry, in my opinion.
Yeah, Keith, I think both you and Rina hit on some key points. I think the large buckets in finance and accounting, or the larger, like really high level things that we want to automate, are probably similar across the industries. Like we want to look at ERP first if it's a smaller org and still doing manual things. Within the ERP, then we start looking at different buckets, and in accounting itself, like how does procurement work? How does the GL entries work? How does the AR AP work? And then in the FP&A space, we're like, okay, how does the forecasting work? So I think there's those broad strokes that everybody kind of looks at that are similar across the industry, but the specifics of like what works for that particular company is very different, right? And how it's going to get implemented, and what what are the different metrics that those teams want to see, or how the process actually works, will be very different depending on the industry that the company is in and the specific requirements of the company.
That's a good point, Dipti. So, like in various industries, I think you hit it collectively, AP, AR, general ledger, financial reporting, analytics, etc., are pretty consistent. But when you get into specific industries, I know in our industry, in the healthcare space, there's significant differences, from a billing perspective, how we collect our receivables. So that might be more industry specific, you know, a healthcare company, say, versus a manufacturing company, where there's a lot of cost accounting and analysis around that, inventory. Some industries, you know, don't really have inventory, which it makes it much easier, but in the manufacturing space, obviously that's paramount there. You know, and I believe that, you know, long as you have a good solid ERP system, to your point, you know, people are trained, they're working the most efficiently and effectively in the system. The other things kind of should fall into place, you know, from a close perspective, and then getting to that financial reporting and analysis step throughout the close process.
Right. Good. Good. Yeah. All good things. All good things. And then just to talk quickly about the second question, what do people need to know, or what do you need to have before you can start this journey? I think I would go back to what I just said about one of Michael's earlier comments, right? Overlaying technology over a process you don't understand is just a recipe for disaster, right? You really need to understand your process flow. You need to understand how it works. You know, if you've got folks that have Six Sigma or Lean background, those are usually good resources to really sit down and kind of process map the as-is process. And then what do you want the process to be? And then once you have a real strong understanding of the process and the goals, you know, overlaying, you know, digitization or automation at that point is the way that I would do it, right? Putting technology over a bad process is just going to increase the speed of failures.
Yeah, it's kind of the old concept, Keith, you know, garbage in, garbage out.
Right.
It doesn't do you any good. And it's not really, you're not really utilizing the technology to its fullest to accomplish more efficient, more effective. You know, and you see that in a lot of cloud-based systems now, which is paramount with the remote working.
Right. Okay.
Yeah,
Okay.
Keith, I think Rena had hit on this before about not the process itself, but I think one of the things for successful digital transformation is really bringing people along, the users, you know, getting their buy-in. Because I feel that sometimes within finance and accounting teams, there's openness to like automating stuff and all that, but the moment we try to involve other teams outside of finance accounting, which is generally the case, right? If you're trying to do a new procurement tool, you need buy-in from all the users that are going to like put in now, like be using this tool. You need their buy-in. That they can be a lot of resistance because it's additional work for them, or it's an additional process or approval chain that they need to now follow. So I think bringing people along and getting their buy-in for adoption is also key to making our teams work successful and the overall org successful as well.
Right. Yeah, no, excellent point. In the survey that I mentioned at the start of the call, the CFO survey, one of the things that the CFOs ranked as the largest obstacles is really their own mind share, right? And their own lack of comfort with the technology, lack of trust in that. So I think, Dipti, you're absolutely right. Getting buy-in of you know, the people that will be, you know, affected by the data or that'll be providing inputs is certainly important. You know, buy-in, mind share, you know, absolutely. I think related to that, a question had come in, you know, asking, you know, are there any concerns from employees regarding job security? And I think that kind of plays into your comment, Dipti, around, you know, getting buy-in and mind share, right? I think, you know, earlier you had mentioned that, you know, there's a lot of work to do and there's not a lot of budgets, right? So we need to optimize the people we have. I think that, and that's how I've looked at it within my own organization, is that the move toward digitalization and automation is not about reducing headcount or reducing costs. It's about doing, you know, more with what we have, right? Because our budgets are not growing as quickly as the workload. So that's how I see it. So good question. So I want to shift just a little bit in this next topic area. So we've talked a lot about automation and transformation and the processes that go into that. There's been a lot recently. There's been a lot of stories recently about AI, right? Certainly, you know, every day in my newsfeed, there's something about ChatGPT and either, you know, researchers having ChatGPT write their papers, or, you know, people filling out Amazon job applications with ChatGPT responses, or people loading code bases in to get, you know, to optimize code sets. what is the role of AI? So with what we're talking about, does artificial intelligence have a role? And if it does, like what is it? What is the role that it could potentially play in this space? So Rena, why don't I look to you to start us off in this area?
Yeah, so obviously this is hot off the press. We didn't know about ChatGPT until December, and now everyone's finding new and novel uses for it. I think with regards to the tools for transformation that exist out there, I think they are still brainstorming how to leverage AI. But we use Adaptive, and I was speaking to a consultant who supports our Adaptive, and he mentioned that there aren't any specific known modules coming out that would strictly leverage AI, but it's all around the corner. For now, the AI seems to be referring to data that's not really current. It doesn't access the internet. It's dated as of 2021. But as that database becomes current, I think there will be a transformational change in how our financial reporting and projections work. I mean, if AI could have predicted the bank run, there would have been a transformational change in how everyone's setting up their operating accounts and treasuries and other things. So I think this is still like a big unknown, but it's not going to be insignificant.
Right. Yeah. No, absolutely. I would agree with that. I think in terms of how we've thought about this in our shop, I'd say we're starting with, small steps. I think looking at, one of the things we're looking at right now is we're planning out a big general ledger upgrade for our company to support, our organic growth and some of our, recent affiliations. And one of the things that has interested me is RPA, right? Or, robotic process automation, specifically around areas of accounts payable. We've got a lot of invoices. We have a lot of expense reports coming in. How can we use RPA or machine learning or something like that to really automate that workflow, which is today very paper-based and very time-consuming. So how can we, leverage some technology to help our accounts payable team process, keep up with that increased, the increased demands of an expanding business?
Yeah, Keith, I'd love to jump in here as well. I'm going to go on a little bit of a tangent about ChatGPT, actually, since it's all the buzz. Actually, if you haven't used ChatGPT, you can use it to. I've used it to analyze competitive financials. Like a note of a caveat here: please do not use it to analyze your confidential company financials and things like that, because the data never goes away. It's always there. So I've used it to actually analyze like competitor, that their filings and whatnot, and it's great at actually giving you a summary of like what their financials look like. And if you haven't done that, like I highly recommend doing that with data that's already available and in the market and ready to use. It's great to like do that. But my general comment on here, I think in the finance and the finance space in general, in the finance and accounting space, I think the use of AI has been really lagging. I think other industries are way ahead in terms of AI use for their tools. What I'm seeing more and more, as Rena was mentioning, is using AI and layering those on into the existing tooling to make it a little bit smarter. So like, for example, the AI will prompt you if the data doesn't look like it's in line with the historical trend or something. It'll prompt you to say, this looks like it's a new transaction or something like that. That's kind of what I've seen with the tools so far within finance. I can give you an example of how we've used machine learning actually at our organization. So at Circle CI, our revenue model is it's not a typical SaaS model. So we're not charging based on seats. Our revenue recognition is actually based on consumption. So depending on how much our customers consume the platform, we would recognize revenue accordingly. So this poses a problem in terms of like, how do we accurately forecast how much our customers are going to recognize revenue, or how much revenue we're going to earn from these customers during the year. So we actually leveraged machine learning to create a predictive analytics model for our customer base for revenue. And this has actually worked very well. So it's looking at all of the historical data points, and it's not just it would have been very hard to like set this up in like in Excel if you're doing a simple like, okay, customer on average did like 12 like in the last 12 months spent this much and we're going to project that out. That's very easy to do. But we actually used multiple inferences into the machine learning model. Like we're using like 6-7 different data points to determine what their historical was, and then using that to project out what their future 12 months of revenue would be. And this has actually really helped to augment our financial forecasting and revenue forecasting, given the unique revenue model that we have.
Great. Those are great examples, Dipti. You know, when I was consulting a few years back and RPA was kind of the new thing, you know, I had a client that was utilizing very manual tasks, and it was for sales tax reporting requirements. And they did build a bot, and something that task that took an individual 3+ days was, you know, really scaled back to a couple hours. And it really provides people opportunities to do more meaningful work. And I think that, you know, goes hand in hand with the retention, where you're getting rid of that mundane work, as we were discussing earlier.
Great, good. So a question just rolled in, Michael, that I think speaks to what you and Dipti were just talking about, right? So how the question is, and I'll read it, is how do you ensure new digital transformation initiatives are accurate, especially in regard to data? So with what you're both talking about, like what have you done to ensure that the your end product is accurate and meaningful?
So on that, I think what a lot of companies are using now is like data warehouses to ensure that data is accurate. I know we're looking to go through an ERP implementation, so we're going through the initial steps to see that are all the accounts that we need on the GL, are those in need, or do we need to expand them more from an FP&A perspective to utilize that reporting, and how would we utilize that with dashboards internally? But I think it provides, once again, opportunities for the team, but just ensuring that the data is clean, accurate, and then it provides more efficiencies for the team collectively, and having that data available real time.
Yeah, I think one of the problems that's critical to solve in terms of the data is to make sure that the data is clean at the source. And the data warehouse really helps with that. We actually use Snowflake for our data warehouse requirements. And then that way, when data is uploaded there, and we have like in finance, we have several different dashboards that query off of the Snowflake data, and we use Looker for the visualization that we use to validate it. And if it looks like it's not correct, we'll actually go back and have it fixed at the source in the data warehouse in Snowflake. That way, when it's getting ingested, when the data is getting ingested by other tools, we don't have like the recurring problem, right? Because the issue we're trying to just solve it maybe in the one tool that you're getting the data, then again, it's still wrong when you try to get it again from the source. So I think trying to clean up the data in the source and then feeding it correctly to the data warehouse is kind of a good way to solve a problem generally across the organization with data.
Right. Yeah, absolutely. Absolutely. And at some level, you're never going to get away from the human aspect, I think, in these as well. I know with a lot of the work we're doing in my current shop, validating the data means the subject matter experts actually looking at the reports, testing it for reasonableness, tracing it back, making sure that, that it does tick and tie and foot. I think once you build that trust and you've established that the data warehouses are reliable, I think you're in a good shape. And then what you need to be mindful of is anytime there are changes in all the interconnected technology, right? A change in an ERP system might impact how data is flowing into your data warehouse. So those points of connectivity are certainly important to be mindful of. So another interesting question came in, which I'm going to jump to right now. So the question has to do about budgets, and let me just pull it back up here. So is there any recommendations or strategies for smaller companies that may not have the budgetary resources that mid-size and larger companies have? Like what are some strategies that people can use to get into this space if you don't have a big budget? Or what can you do to help maybe get that big budget and justify some investment?
Yeah, I think you need, buy-in from the executive team as far as from a technology perspective. We are still on a server-based. I had mentioned we are going to start going through an implementation for our ERP system. And it's going to go from a server-based to cloud-based. In all actuality, the cost is going to be cheaper. It's less expensive because now we eliminate the servers and the licenses around them, and the IT people to support that. Where a subscription-based service, whether it's a NetSuite or a Business Central, it's all cloud-based. So when we ran the numbers, it is it's less expensive with the new system that we're going to. I don't know if that exists in every industry, but that's what we've experienced with this current implementation that we're going to kick off.
And with regards to a smaller company setting out to budget, I think typically that's where the cash runway is a sensitive topic. So it's important to have a budget that foots pretty closely to the cash, and that might need adjustments in the accrual-based budget to bring it to mirror cash. For example, if you're going to pay your insurance premiums upfront, it's not very helpful to show them monthly as they would amortize, but rather to show them upfront. So and that's where some of these tools get tricky to use, because they either go accrual-based or cash-based, and what companies sometimes need is a combination of both. So there's inevitably that human element that Keith mentioned, to bring the reasonableness check and to see if this is really what the value add is, or if we need to make adjustments outside of what the models and the budgets that are coming out of the tools to deliver the information that critically is needed.
Right now, absolutely.
Yep.
Absolutely.
I was going to add a couple of points to what Rena and Michael already said. I think it's really around showing how the technology is adding value, right? And sometimes we tend to steer towards, okay, how much cost is this saving? And that's the only value that this could add. But I'd encourage everyone to think about it creatively, right? It could be cost avoidance, like you're not going to incur additional cost because you're going to implement this new tooling. That's a value add. It could be a reduction of risk and compliance, getting better with that. That's a great value add for finance and accounting teams. Another one could be it's supporting better decision making, right? And turnaround time of information. So these are all things that the technologies can help enhance, which are maybe not necessarily related to, okay, saving actual dollars in the current spend or something, but all of these are value add that can help us to justify or bring this up to get buy-in for new tooling.
Right. No, absolutely. I think there's a lot of different ways to approach this. And again, I think it's important to remember that you can start small, right? There's a lot of ways to enter this space without large investments or potentially any investment. You may be able to work with the vendor of some of your applications to make small changes to really put your toe in the water and test some of this stuff out. And then again, if you can demonstrate that the use case is gonna have a certain financial return or a certain improvement in operating activities, then that's a good way to try and build some momentum. But there's certainly things you could do without a large capital investment. So I think the discussion we just had, I think, also answered another question. Another question that came in asked, is the momentum around this space slowing down, or is technology innovation in this area slowing down? And I think from my own perspective, I don't think so. I think it is. I think it is certainly ramping up. Certainly, ChatGPT is kind of the tip of the iceberg, I think. In terms of that technology being included into this stuff, but I think I think what I'm seeing now, and I'm certainly interested to hear what my fellow panelists have to say, I think technologies going forward are going to have to incorporate this sort of functionality in, or they could potentially risk getting displaced. So I guess I'll throw it out to the panel. From what you're seeing, are you seeing, is this accelerating? Is it decelerating? Is it hitting some sort of plateau?
Yeah, I definitely see this accelerating actually, Keith, and not slowing down. I know, you would think in this environment it's slowing down, but I see digital transformation and move to different technologies actually accelerating. Where I do see maybe more buttoning up happening is like, if you have an existing tool, people are really making sure that they have the right number of licenses, the right level of the tool to where they're not having to overpay. They're not overpaying for the value that they're getting from those tools, but I don't see a general slowdown in the exploration of automation, because like as we've been discussing in this panel so far, that's the way you can accelerate growth without adding maybe additional headcount. It helps the teams to helps to up level your existing resources. So definitely not seeing a slowdown here.
Right. So yeah, absolutely. So I guess I'm certainly interested in what anyone else has to say, but we're starting to run a little short on time. And there is one question that I saw came in that I think is certainly relevant to the kind of the work environment today. So a question had just come in that asks, how does a hybrid workforce hinder new digital transformation initiatives? So I guess I'll open that up. Is hybrid work a hindrance, an accelerator? Is it neutral? Who would like to jump in that question?
I'd say it's neutral. I'd say it's mostly neutral because, as Michael said, all the tools are largely nowadays cloud-based, and this sort of touches into the prior question as well. A lot of the tools are doing their own releases and improvements and enhancements, so the transformation is moving forward. Even if we don't invest in a new tool, we are going to be users of those advanced capabilities. And I think hybrid workforce is basically not a big deterrent or promoter of transformation.
Yeah, I certainly don't see it, I think, as a hindrance. I think, whether it's, I think in some area, I mean, it's like everything. I think there are pros and cons, right? I think there's, having a workforce in the office, certainly there are some advantages to ad hoc interactions with colleagues and sort of, doing things that are more spontaneous. Although I think, in a hybrid environment, you maybe tend to be a little bit more methodical about your process and your approach. So maybe that's, maybe there's a benefit there. So I think we got maybe 1 more minute left. So I guess Michael or Dipti, do you want to add anything before we pass it back to Brittany?
Yeah, I think on the hybrid workforce question, I think it's an interesting one because I think the hindrance or non-hindrance is equivalent to any change management, right? Like change within an organization when you're implementing something is always difficult. Trying to get people, like existing people who are used to doing work in a certain way and trying to like change the method of working now, that there's always a challenge with that, whether the workforce is hybrid or not. I don't feel like that poses an additional challenge. I think also over the past few years, like companies have figured out like a good way to work remotely, communicating across the board for bigger changes. So I feel like that probably was a challenge earlier on during the pandemic where we hadn't yet figured out how to kind of communicate things and consistently to the workforce, which was hybrid. But I feel like companies have gotten over that hurdle now to where this is probably not necessarily an existing challenge that the workforce is hybrid.
Okay, great. All right, so I think with that, I would like to close it out by thanking the panelists. I think this is a really great session. I'd like to thank the audience members that sent in questions. We had more questions than we could possibly answer, so I hope we were able to get to enough to make it worth everyone's while for today. And so with that, I will pass it back to Brittany to close us out.
Thank you guys so much for such an insightful panel discussion. I also want to thank everyone who joined this session. This session, along with all of today's content, will be made available on demand following the event. Thank you guys again.